Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Good Lord, Canadian MJ friends, just when you were all getting bored, we got a crazy day of action with tons of lessons to be learned. First off, if you've been watching our videos in the last 3 weeks, you've heard me say at least 6 to 12 times, Cron is our lead bull, APHA is our lead bear. A lot of people say you can't put news on a chart. Absolutely, you cannot put news on a chart. That's something that is unknown and comes out of nowhere, but there are clues that can be gathered, and this was an example where we see why was APHA so much weaker than the rest of the sector over the last 3 weeks. Now we know that this short group has been establishing their position and driving the price down. You better believe that the shorts were fully loaded before this news came out, and that's them accumulating, keeping the price weak. Why was Cron stronger the last couple of weeks? Well, clearly someone was accumulating, and here we have a gigantic spike on the bull break of 908 with follow through on the news of the rumor of the potential buyout. CNBC all over it. So again, I love seeing this happen because it's just so clear. Oh, this all makes sense. We were seeing Cron stronger because people were accumulating before putting out a rumor to run the price 20+%. And oh, APH was weaker because shorts were establishing positions before publishing a potentially damaging report. As far as the report goes, that's up to you to read and do your own due diligence and take it with a grain of salt or believe it or whatever you want. A couple things to note. Insiders were buying today on APHA. We have some decent positions here. You can see the date, December 3rd, and 120,000, 117, 120. So they were buying today. That's worth noting. The company did put out a response to the short sellers' accusations. It was a very weak response. There was no details in it. It was a very cookie cutter standard response, and the price did not respond well to it. Here after hours, the price right now from the close of 605 is currently down about 4%. And as soon as the market closed, the bears put a big wall up of 275,000 shares on the ask of APHA at 585 on the US, and that just drove the price down. So another lesson today. So one, yes, we can see clues of what's going on behind the scenes on the charts, and we can position ourselves for that. Cron gave a clear bull break. Hopefully, some people entered swing positions based on the daily equilibrium breaking bullish. I did not. I was traveling. I was not at my computer on Friday to the degree that I would have liked, so I was not building positions. I missed out. I'm not worried about it, but congrats to the bulls that did get in on that bull break. We got a signal a day in advance that got significant follow through. APHA bulls are hurting in a big way. But the lesson here is having cash available, because we had a ton of people profitable on APHA today buying into the weakness, and myself included. I was buying pre-market, got in a little bit too early on my initial entry. We're going to look at the US ticker here so we can look at the extended hours action. So we saw very clearly something's going on. It looked like a great open was coming up at 840, about to test resistance. We dumped out of nowhere. Clearly, some news is going on, and the news was not issued by, Fidelity or anybody else. So I could clearly think to myself, all right, this looks like some kind of short attack, some kind of news leak on social media. But we were looking at a bullish entry. Why were we looking at a bullish entry in the face of complete fear and a meltdown? Because gap downs are for buying. That's not enough in this instance. That's one reason. But the reason is nothing to do with the company fundamentals, nothing to do with the short seller accusation, everything to do with market psychology. I put myself in the position of shorts, and I say if I am short and I'm building a short report on APHA and I have been establishing a short position for weeks at this point, we're at a point right now where the market sentiment has shifted in the S&P 500. The Canadian MJ sector at the open this morning, before the open at 8 a.m., was prime to break 4-hour patterns bullish, to break daily patterns bullish, and to start a real daily bounce. This rumor came out because of the market strength. In my opinion, the short seller said, all right, it's time to cover our shorts. It's not time to establish our short positions. It's time to cover them. They've been establishing them for a while at this point. And they say, all right, bulls are about to tip the scale and get a bounce going. We don't want to cover our positions into bullish momentum. Let's drop the report. We'll get a gap down open and we'll start covering. So again, when you're dropping the price pre-market, it is way easier to move the price with minimal volume compared to during regular trading. Let's just take a regular trading candlestick here in the middle of the day at noon during lunch. And we're seeing candlesticks, the small ones, volume here was 170,000 shares traded. Pre-market, that's enough volume. Let's see, 210,000, 209,000. That dropped the price from $8.25 to $6.94. $1.31. Over a 15% drop on the amount of volume that during regular trading hours is moving the price 8 cents. So $1.30 versus 8 cents. You want the weakness, you want the fear pre-market because a little bit of selling goes a long way and there's not a lot of support established. There's not a lot of market makers there to buy up into that weakness as everybody is dumping. So I started to enter a little too early. I initially had an average of 660 and I added one more time to get my average down to 630. And then as we kept dropping under $6, I said, all right, I'm not adding any more during pre-market. I'm waiting to see, do the bulls start or do the bears start covering once the bell rings, as I anticipate that they are going to. Because again, if I am a bear, I have my position established over the last 2 weeks. I release the article. We get the fear, maximum capitulation, giant gap down. Then I start covering as soon as the bell rings and I can get some real volume going. If I start covering pre-market, I'm going to jump the price up way too significantly. I want to cover after the bell rings. So bell rings at 9:30. We got a quick push up to 691. At that point, my position, again, my average was 630. I did not add another position as I was planning I would if we saw further weakness below 555. So I just locked in my profit, ended up with about 5% plus gains. Surprising day maker and a little bit more than day maker out of nowhere. Very pleased with it. And I did take another entry on APHA with the double bottom. 560 support, 565 held. The bull break of 591 was the bull signal. I went in pretty darn heavy here, probably the largest position I've ever had in APHA, and then just slowly scaled out. I broke my position up into 6 positions and just scaled out one every 10 cents I was scaling out. And I ended up with another solid win. So at that point, I was done for the day. I'm not going to touch APHA again. At the end of the day, we came down to test the low, and that was a decent, higher low bottom fishing setup off of 555, but I'm not touching this and swinging this overnight at this point with this weakness and drama. I'm taking those profits, I'm running away with them, and I'll take it with a fresh, clean slate tomorrow. So that's how we played the gap down open, and a lot of people were buying pre-market into that weakness, knowing that shorts were going to cover. So let's get into some regular analysis. What else did I want to say? So one last point, Cron giving us the bull signal a day in advance, that allows us to put ourselves in a favorable position. Again, bulls making an entry on that signal had no idea news was coming, but it allows them to benefit from it because they acted on that bull signal and were in a position, potentially swing trading, to get that news benefit. So that's pretty much the psychology of what goes on with patterns and with breaks. Some of the time, the clear bull breaks on a stock are not going to give much follow through and you exit with a small loss. But putting yourself in the position to benefit on the times when it does get the significant follow through is why we play these patterns, knowing that no, 100% of the time it's not going to work out, but more often than not it will. And this is obviously one of the extreme examples where it was best case scenario. So CGC on the daily time frame broke resistance. Again, everybody saw hype and euphoria with Cron. It was a pump and dump. There's no doubt about that. Let's start with Cron. So why was it a pump and dump? Because we pulled back 15+% from the high of the day. That's a pump and dump. So we have the hourly higher low attempting to be established at 978. We've got resistance up at 1189. Had a nice little bull flag there after the initial bull reaction. Bull flag and continuation. A bull buying at $11 saw 8% gains instantly in less than 10 minutes on increasing bull volume. But then we just faded and we gave it all back and we consolidated all afternoon. The question as we head into tomorrow is, can the bulls hold 978? If we lose 978 support, it's a red flag that, yes, that's a pump and dump with no follow through, as rumors tend to be. Take your profit if you have a huge gain and it's a rumor that's causing that gain. We've seen it so many times in the last few months. We haven't seen one of these rumors in a while, but it's the same game plan as before where it fades pretty quickly. So 978 key support. We have to see a trend change on the 5-minute time frame, which we didn't get. We got a break of the lower highs when Kron was being talked about on CNBC, but we never saw the higher low and higher high confirmation of the trend change. We just faded into the end of the day. So the hourly time frame, we have to see the 5-minute trend change to indicate, yes, our hourly higher low is established, and now we're going to look for a lower high in the upper $10 range. So bulls need to hold 978 and see some follow through tomorrow over 1034 and 1044 to try and set the hourly lower high and hourly equilibrium. That's what we're watching for Kron. Obviously a very significant bull break on the daily and weekly time frame. Question is, can it hold up? Can bulls hold these gains? But we know that even if we do fade further, we're going to keep the daily uptrend. 809 is the higher low the bulls need to hold. CGC, everybody saw the bull break with Kron, and everybody reacted to that news. There's CGC. Huge bull volume, shorts forced to cover, and it just faded because the rumor had nothing to do with CGC, and again, it's just a rumor. So we pulled back. We got support here at 3307. A break at 3307 is a red flag. The bulls have to change the 5-minute trend, just like Kron, to see a bounce, but we would anticipate a lower high on the hourly because of how much we have pulled back. We will anticipate a lower high compared to 3518, the top of this move. The daily time frame broke key resistance, but that was in correlation with that hype and that, bull euphoria that lasted very briefly. But we got no follow through on that bull break of 34.85, the highest price that we've seen in 2 weeks of trading, because it was tied to that correlation. And again, it faded. So the bears are still in control. Again, it's a bearish market. We just have to keep that mindset right now. Canadian MJ and US MJ, for the most part, bearish. We got bearish reaction to APHA this morning, which drove everybody down and started everybody with a weak start to the day, very negatively affecting the entire sector. Kron rumor, bullish affected everybody, but it faded. It didn't last at this point, and we don't have a whole lot of confidence from that rumor that that's going to change the market sentiment for any kind of meaningful daily bounce. So at this point, we're watching CGC, cautious of a weekly bear flag because the market is bouncing, oil is bouncing, everything, the stars are all aligning. And when I was talking about it's time to start looking in the other direction, and then we saw that bull day last Wednesday, everything that I was hoping for to happen, aside from Canadian MJ being strong, has happened, and we've seen no correlation with Canadian MJ to those events. Those are red flags. So we're trading sideways. There's not a lot of short-term hope for these bulls unless we can turn around and break the high of today tomorrow, which is not likely. The more likely scenario, again, is this hourly equilibrium and tightening range into Wednesday. Canada will be open on Wednesday. The U.S. will not. APHA, so at this point, extended hours, we're down at 575. So support is 565 and 555, the only two support levels. Resistance is 605 and 668. So tightening range here as well. We have the high of pre-market, low of the dump, top of the bounce, higher low, lower high, attempting a higher low, trying to hold 560 support. If we get any follow through tomorrow morning, we'll be looking for a lower high in the 620s, 630s. That being said, by the big order that I just saw in extended hours, someone putting 50,000 shares, one of the biggest orders we've seen in extended hours on APHA in a long time, someone parking that right at 585, they're trying to see weakness into tomorrow morning and the potential of a gap down. Shorts want to see a gap down open, and they're going to do everything they can to ensure that gap down open. So we're going to see a battle tomorrow pre-market as to whether or not we can hold 555 or not. If 555 breaks, at this point, we have just collapsed on APHA. There's no other way to look at it. We have given back all support levels. We're looking down at 507 as the next level. And we are back at levels from October 2017 before any of the run-up. I should say right when that run-up got going. That's where we find ourselves again. So obviously tons of bearish sentiment. At this point, if you're trying to establish a long position in APHA, have a break-even or have try to get a break-even level for a trade game plan. But have a stop loss. Don't just buy and say we're extremely oversold. It's a falling knife still. We could absolutely see another leg down. But once the bottom is done and we do see the bearish momentum subside, there will be significant opportunity, just like there was this morning. So it's worth paying attention to. I'm probably going to trade APHA again because we're going to look for extreme volatility. Same with Kron. These two names are going to have some solid volatility this week. But it's all about the hourly tightening pattern and whether or not the lows can hold. ACB, daily chart still weak. Support 707 was tested and held. Key resistance is 794. So we have a tightening range on the last 5 days. If we look at the 4-hour time frame, low, high of the bounce, higher low, lower high, and have to see a bull break of 794 for the bulls to get any momentum. So bears are still in full control of ACB. Definitely was affected in both directions. ACB weakness with APHA rumors, or I should say the report. And then Kron bullish action definitely helped ACB. Everybody in the sector responded. Shorts had to scramble to cover, but then it faded, just like everybody else. So looking at the hourly of ACB, trying to form a higher low at 744. Not confident that that is our higher low, as we were right down there at the end of the day. And we have to hold the low of consolidation at this point in all of these individual names, or lower lows are coming. TLRY, bear break of $99 today. No follow through on that bear break because the rumor came out right in time after that bear break. Bulls showed up right off that bottom for a 10% bounce. Low of support, lower high, clear bear break below 104.52. So on the hourly time frame here, higher low that the bulls are attempting to hold is down at 101.34. So the key levels short term to be watching into tomorrow is low of consolidation and high of the day. That is our range to be watching. If we break the low of consolidation, we're right back to the low of the day. If we see a bull move, we're looking for the lower high compared to the high of today and a tightening hourly range as the more likely scenario. So again, ACB 744 to 787, APHA 555 to 668 is the range I'm watching. CGC 3307 to 3518 is the range, and Kron 978 to 1189 is the range. And there's so much space to work with in there that if the bulls do show up, there's going to be a solid opportunity for perhaps 5+%. If the bulls can hold 940, make that 978, and see an hourly lower high form, there will be bull opportunity there. So tomorrow pre-market, we're going to get some more information as to how we're setting up based on these levels. Congrats to the bulls that locked in profit. Congrats to the bulls that went against fear and went against the herd on APHA, realizing what was going on, recognizing market sentiment and how the sentiment with those shorts would be working. And we'll see what tomorrow brings. Certainly no shortage of action to start the week. And like I said, my attention's on Kron and APHA due to the wider ranges, which means more volatility, which means more trading opportunity for short-term day traders. Hope you're well. Do some good things out there, and we will see you all tomorrow.